Ladies and gentlemen, welcome back to the channel. Here in this video, we will be going over your Tesla stock breaking news, broader market breaking news today. But what we're also going to do is look at the catalyst coming for this week. We have some pretty unique catalysts, like the yearly non-farm payrolls revision. Yeah, a lot of you guys didn't even know that existed, and that's going to be taking place this week. We're also going to have CPI data, Michigan consumer sentiment data, among other things, which is going to drive this market. Could be substantially higher or lower. Keep in mind, it is September. There is a downside bias, and that should be factored in to this week. Ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. If you want to come join the trading community, come get involved in what we are doing, check that link out down below in the description of this video, but more on that in a few moments. Let's get into your Tesla stock breaking news. As always, we start with your Tesla news, and the Tesla Optimus X account posted these images, and they title them, "I've been working on my figure." And it's a different design for the Optimus bot. Elon Musk wrote on X, he says, "Just had a great design review today with the Tesla AI5 chip design team. This is going to be an epic chip. And AI6 to follow has a shot at being the best by AI chip by far. Switching from doing two chip architectures to one means all our silicon talent is focused on making one incredible chip. No brainer in retrospect. Please join the Tesla Silicon team if you want to work on chips that save lives." Ali Sheriff responds and says, "The best AI chip for cars, you mean?" Elon Musk says, "Could be wrong, but I think AI5 will probably be the best inference chip of any kind for models below 250 billion params. By far the lowest cost silicon and best performance per watt. AI6 will take that much further." Pretty cool. You can see a close-up of the Optimus bot and the face here, and you can actually see the eyes, which are the cameras. They sit a lot lower than where a lot of people would think. And the Tesla Optimus X account shared this video of Optimus serving popcorn and has a title here, Poptimus, which I think is pretty accurate. U.S. Department of Energy said, quote, "Wind and solar energy infrastructure is essentially worthless when it's dark outside." Elon Musk comments and says, hello, and tags Tesla Megapacks. Because again, you collect the energy and store it in batteries. Tesla's first shipment of German-built Model Y vehicles has officially arrived in Canada. Elon Musk says that, he comments under the image of the evolution of Optimus and says, "We haven't shown Optimus V3 yet. It is sublime. The second two images are V2 and V2.5. Kathy Wood wrote on X, she says, "Here we go, Tesla Robotaxi." Also in the news, State Street bought 2.1 million Tesla shares in Q3. Option activity on Friday, as previously discussed, you had 279 different trades from hedge funds and institutions, totaling $196 million with a positive order value of 66%. On Friday, you had about 20,000 shares that were covered on short interest of free float at 2.84%, about $27 billion sold short in Tesla, with 76.89 million shares that are currently sold short, and shares out on loan at 15.86 million. In broader market news today, Trump says that China needs us more than we need them. Japanese Prime Minister Ashiba plans to resign per Bloomberg. Chinese hackers pretended to be top U.S. lawmakers during trade talks. As the Trump administration's contentious trade talks with China were set to begin in Sweden last July, staffers on the House committee focused on U.S. competition with China that began to get puzzling inquiries, according to people familiar with the matter. Japan's Prime Minister Ishiba says he hopes the next leader works on tariff measures and wage hikes. Ishiba says, I hope the new leader sees through the U.S. trade deal to the end. U.S. trade deal is not completely over. And says the U.S. is not altering the economic policy off of one number, referring to the jobs number that came out on Friday that was really bad. Besant says job figures reveal Trump is correct to criticize the Fed's tardiness. U.S. Treasury Secretary Besant says revisions for 2024 jobs may be reduced by 800,000. And we'll get into what he's talking about here in just a moment. Besant says he is confident the government will win the tariff ruling in the Supreme Court. Besant says we'd have to pay refunds if the court rules against tariffs. Besant says that Trump spoke to the EU chief on Friday on Russia. Besant says there will be an AI economic boom as soon as the first quarter of next year. Hassett says there will be talk today and tomorrow about Russia sanctions. Hassett says the timing and level of Russia sanctions is up to Trump. Hassett says he is suspicious of the data quality in jobs data. Hassett says the BLS numbers require approval and modernization. Hassett says that Fed monetary policy must be entirely independent from political influence, including from Trump. Hassett says, I do not have a plan to overhaul the Fed right now. Okay, now, the economic data for this week is going to be the real mover for markets. Again, keep in mind, it is September. You are in a weak seasonal period, and you don't always want to just believe the market's reaction, okay? Now, there's a downside bias in markets. Let me explain this. Like what we seen on Friday with the jobs report that came in worse than expected, but yet markets did pretty good. The Russell was up 0.5%. That's a strong sign. You're not going to get like upside moves in September that are, I guess, not accurate. Okay, so there's the downside bias, right? For an example, jobs report on Friday. Russell went up. Risk on stocks did a little bit better than you would have expected. Okay, that's essentially like the reaction, right? Well, if the NASDAQ would have fallen 2%, Russell down 3% on Friday, like that would have been a drastic overreaction. Okay, that would have been something you would have wanted to look through a little bit. But since we did get a positive reaction, it's telling you that Wall Street looked at that jobs report on Friday as pretty good for some areas, not for others. Now, as I said on this channel as well on Friday, in reaction to the jobs report, it really showed me that Wall Street isn't concerned about a recession. Okay, because the Russell, sure, while the Russell benefits from rate cuts, the Russell is by far the most impacted negatively index if we go into a recession. So if Wall Street was really concerned about the jobs report on Friday, the Russell would have been down the most. Okay. Instead, you had big tech that sold off. And it was kind of a rotation into other areas like small caps. Now, for this week, we're going to have some economic data that could move the markets quite large as well. Starting off tomorrow morning on Monday, you have consumer inflation expectations at 11 o'clock in the morning. And then at 3 p.m., you have consumer credit change. Monday is going to be the slowest day of this week. Then on Tuesday at 10 o'clock in the morning, we have non-farm payrolls annual revision. This is what Scott Bessent was talking about, okay? The previous year, so for 2023, we had a negative downside revision of 818,000 jobs for the year. Bessent says we could have around 800,000 negative downward revisions for 2024, for the prior year. Does it change anything? No. Like, the economy is going to be the same before Tuesday and after Tuesday. But some people are going to they might react to it. Okay. Now, with Bessent saying that, the expectation is going to be around negative 800,000 jobs. So if you come in at like a million and a half, something like that, then markets would probably react negatively to that. But again, it's one of those catalysts that really just doesn't matter. Like, sure, could it move markets? Yes. But does it actually matter? No. Doesn't change anything. So if markets do, let's say, fall a lot on Tuesday, you got to look through that one. Wednesday, you get PPI month over month. You're expecting 0.3%. Last month was 0.9%. So expectations are quite a bit lower. If we come in around expectations, that should be a positive sign because it's such a big drop from last month. But still, 0.3% is kind of elevated. You want to see a lower number. But hey, it's not the end of the world if we get 0.3%. You get wholesale inventories month over month, a lot of oil data, couple bond auctions, monthly budget statement. You have a 10-year bond auction here at 1 p.m., which is going to be important. On Thursday, you have core CPI month over month. You're expecting 0.3%, unchanged from last month. Okay. So 0.3%, again, there's a decimal point there, right? These numbers are rounded. So if you came in right on 0.3%, that would be 3.6% on a 12-month annualized basis, okay? If you come in at 0.25%, you're going to get revised up or rounded up to 0.3%. That is 3% inflation. Well, you could also come in at a high 0.3, which would be something like 0.34, and that would be 4.08%. So the actual decimal point is likely going to be what moves markets, okay, if we come in line with expectations on the headline. So you do want to look into the report a little bit more and see where the actual decimal comes in, okay? Now, core year over year is expected at 3.1%, unchanged from last month. Headline inflation month over month is expected to rise 0.3%. Most of this is just influenced by energy prices. So year over year headline is expected at 2.9%. Last month was 2.7%. So broadly, kind of not much of a change from inflation is what we're expecting. A little bit of a rise from headline inflation. Okay. Obviously, if these numbers come in too high, that's not going to be great. If they come in on the low side, that's what you want to see. And again, I don't know how these numbers are going to come in. They probably come in line pretty close to where the estimates are. But you could surprise a little bit to the downside and come in a little bit lower. Now, initial jobless claims last week came in at 237,000. You're expecting 240,000 on Thursday. This data comes out at about 8:30 in the morning. So Thursday is going to be the big day. And then Friday, you are going to have Michigan consumer sentiment. And you are expecting the headline number to go from 58.2 to 59.2. So you are expecting that number to go up. 5-year inflation expectations expected to hold steady at 3.5%. Consumer expectations are expected to fall from 55.9 to 55. Current conditions expected to fall from 61.7 to 61. And inflation expectations for the next year are expected to fall from 4.8% to 4.6%. This is one of the stupidest things that Wall Street cares about. The Michigan Consumer Sentiment Survey is very political. It's very much just dominated by Democratic respondents. Okay. And there's only like 200 people that respond to this survey. So by no means is it a good metric of expectations for the economy from the consumer, right? It shouldn't even be something Wall Street cares about. What Wall Street cares about most in this survey is the inflation expectations. Okay. If inflation expectations fall or rise, that is going to be what, is taken away from this report. And that's likely what is going to move the markets on Friday. And that's it for your week. Now, all of this data could move the expectations for Fed cuts. For an example, if we have a really low CPI report and we have a big downward revision for yearly jobs on Tuesday, you could see the odds of a 50 basis point cut go up quite a bit. For September 17th, which is the following week, the next Fed meeting, there's a 91.7% chance of a 25 basis point cut. And there's an 8.3% chance of a 50 basis point cut. There is a 0% chance of the Fed pausing or not cutting rates. Okay. Now, October 29th's odds are going to move around quite a bit. Okay. You are expecting another cut October 29th at 74.8%. The odds of a cut in September and then no cut in October are at 18.6%, and the odds of a 50 basis point cut in October or in September are at 6.6%. So you're pricing in a cut September, a cut in October. You're pricing in a cut in December as well at 64.2%. So likely with the economic data that we get this week and really over the next couple of weeks, it's probably going to move the October and December odds the most, right? I mean, September's pretty much a certainty, but October, specifically December, those odds could change quite a bit. For Tesla stock specifically, we had big news on Friday, right? Elon Musk's compensation package is out for the public to review before the shareholder vote on November 6th. I think it took a lot of Wall Street by surprise. I don't think a lot of Wall Street was looking at Tesla like an AI company, and I think they have to now, right? Tesla is saying that Elon is not going to get paid a dime unless Tesla's stock doubles at least from here. That's incredible. Okay, that's going to be a lot of shareholder value being created. And for Tesla stock at $350 per share, and what we should logically view as the odds of Elon hitting at least some of these tiers in the compensation package, like the stock should be higher, right? Think about it like this. What do you think the odds are that Elon hits one tier in the compensation package? Okay. What do you think the odds are over the next 10 years? 80%, 90, 100%? You probably think 100%, just as I do. From a Wall Street's perspective, like, there's good odds that Elon is going to hit at least one tier. Okay. Tesla is trading at a 50% discount to what one tier would unlock for shareholder value. Should you be trading so low? Probably not. Okay. Tesla has to get to about $640 per share to hit the first tier. Okay, which is that $2 trillion market cap and at least one operational milestone. Just I think on a probabilities kind of basis, Tesla stock is too low, right? And I do think this is a positive catalyst that if it were not in September, Tesla probably would have been up 10% on Friday. So I think it's a gift that's going to keep on giving, especially once we're out of September and out of the seasonal weakness. I think we're setting up for a very strong October, November, December, as we've talked about on this channel over the weekend. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit that like button as well as subscribe to the channel. Check out that link down below for the trading community if you'd like to join it. Our portfolio is up 97% year to date. What we're doing is going out finding small cap AI stocks before Wall Street does and investing in those. Okay, if you're early, you can invest in very high quality companies and get massive outsized returns, 10, 20xers, right? Normally, if you want to take on, if you want to try to go for 10, 20x kind of returns, you have to take on a lot of risk. I don't really like doing that, right? I want to invest in the high quality names that I believe Wall Street is overlooking. And we have identified those opportunities and we are exploiting those. So come get involved with the best trading community in the entire world. Keep in mind, I'm not a financial advisor. I'm not a financial planner. I could be wrong. You could lose all of your money. Contact a financial advisor before making an investment decision. That is it, ladies and gentlemen. Have a great rest of your day. Go Lions. And I will see you in the next one.